Welcome. I am Eric with Muathe.com, and I greet you in the love and in the light of the one infinite creator. So in this video, we are going to be taking a look at the Nifty and see what we can learn from an educational standpoint based on the charts. February 14th, 2022. This is how US markets, which just opened here over the last 10 minutes or so. But we're going to be taking a look at the Nifty. Overnight, it was down about 3.06%, and really not a big surprise because we have two instances on the daily where we have RSI 50 uniform activity rejection. Oh, by the way, also I just noticed that also we have this what looks like a double top at the other threshold, that threshold being at RSI 69.1, something I talk about a lot. And of course, that corresponds with this high for the beginning part of 2022. Remember also on the daily, from an educational standpoint, if we take a look at the recent high for 2022, we can see it corresponds with this general line here. This line that gave us this break point of that high and now turned into resistance as of early 2022. So the pullback does make sense, but all that was digressing. What I want to discuss in this video, and this is based on the concept, an original concept by yours truly, which I call the two wrongs, and you'll find a couple links in the description discussing this concept. Lots of videos in that playlist for you to consider. Again, take a look if you want to understand this concept a little bit more. It's called the two wrongs bearish setup method. Now, go back to that monthly chart, and I'll save us some time here. There are two levels here that we can use. There's this closing high from October, this monthly closing low from November. And the prices here is 17,671.65. And this is October's monthly closing low. And then we have November's monthly closing low at 16,983.20, which is this close right here. So, understanding the two concepts or two wrongs method, we can see that if we take a look at what happened over the last couple months, we've had some failed breakout attempts on the monthly chart, and now we are threatening to break this number. And I should have mentioned this is the monthly chart. Going back 5 years. So 5 years monthly, so we can have a bigger view of the picture here. And so based on the concept and that setup method, if we end up staying below this number, then that's going to be the second red flag. Of course, the first red flag was the failed breakout. Second red flag would mean we are now open for lower prices. Again, another digression here. Also, we need to understand the concept of RSI 69.1. Essentially, the Nifty has been holding above 69.1 for almost a year, and it's been bullish in that phase. The more we stay below RSI 69.1, if we stay below 69.1, the more we are going to be looking at lower prices. What can save the Nifty now is the RSI on the monthly would have to move and stay above the 69.1 threshold. Now, I should add on the monthly, we really can't use the MACDs on the monthly for now. Reason being that crossovers above zero or bearish crossovers are not as reliable. So we can't use this for now, even though, yes, there's a way you can look at this and say, because of the extension, let me explain this in a second. And I didn't know I was going to talk about this, but wait, why not? All right, so crossovers can be a little bit tricky on the MACDs. Now, because, and this is going to be a quick explanation, because we cleared this range, in other words, we went above the prior highs of the MACD, then crossovers based on that concept are more reliable. We had a move here. In other words, if you take a look, let me summarize it this way. So let me explain it this way. This is a very long extension of the MACD. Very long, almost straight extension. And if we take a look at this data going back to the 90s on the monthly, this is the longest upward continuous MACD move. So a crossover from here, even though it is above zero, can be used as a sell signal and a sign of impending move down. So I usually have to explain that I have two MACD settings. So we can see that there's already been a crossover here in this other MACD settings. Given the range, it has moved from here to here, going to all-time highs. A crossover from this setup could be more reliable. Otherwise, generally, crossovers of MACDs above zero are not very reliable, which brings me back to the weekly chart. And on the weekly, we can see that the MACD is giving a different point of view. Here, we went above zero and back below it. That tends to be a reversal sell signal. When you move above zero, back below it with uniform action, tends to be a reversal period. Just like this was a bullish reversal period, you held the zero with uniform activity and prices went higher. Let me show those prices at that point. All right. So here we have it. Uniform activity support on the zero MACD line, as I discussed in many of my MACD videos, led to this gradual reversal here. Now we are seeing the opposite, which is uniform activity rejection. And so we can also see that this is the market responding with a gradual slide that is going lower. The more the MACD stays below zero, the more prices are going to be pressed down. And the main MACD, as per my settings, is approaching zero. Should the MACD drop below zero, expect the market to pick up momentum to the downside. And one more final note, which is based on the RSI this time. At the end of last week, last Friday, the RSI ended the week at 52. And this is, of course, for the Nifty at 52 and change. And we can see for now, this after Monday's action, the RSI is below 50. What this means is there's a probability that as long as the RSI stays below 50, as long as the RSI stays below 50, we should be open for the market to continue have this bias to the downside. And recording of a big down week makes sense if the RSI stays below 50. And we are going to close towards the lows of the week's action if the RSI stays below 50. To correct this, the RSI can always during the week move back and recapture the RSI 50 level. And if it can recapture the RSI 50 level, then stability is going to come back in the market in the short term. Keep in mind, RSI 50 has been used for support. And so this is a big deal whether it finds support or not. Support is what the bulls want to see, so the market can coil higher. At the same time, staying below RSI 50, and especially if we end up breaking and staying below this RSI lows trend line, that in itself is a sell signal. So a lot of things here, concepts discussed. I'm going to try my best to add links in the description of this video, so to help you along if you want further information, if all of this stuff is new to you. And so it is. I am Eric with Muathe.com, and I leave you as I found you, in the love and in the light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai. Okay, the video is over, and I hope I provided you with some value. If you want more, why don't you consider taking advantage of my 30-day free trial to my website, and especially if you trade US stocks, ETFs, and you also trade cryptos. I provide a premium service where I give breakout alerts and also midweek market analysis videos to help you gauge where your positions are in terms of potential for market direction. So take a look at my paid website, and boy, will you be surprised. Should you decide to stay after the trial period, you'll be surprised by how much it costs. Yeah, it's a surprise. So consider taking advantage of that offer. Newly introduced a 30-day free trial. Decide if it's for you. If it's not for you, no harm, no foul. Still wish you all the best in your journey. I am Eric with Muathe.com, and I leave you as I found you, in the love and in the light of the one infinite creator. Go forth, therefore, rejoicing in the power and in the peace of the one creator. Adonai.